Hello, everyone. Welcome back to another episode of OneTAKE Live. I am your host, Ian Barkin. It is so great to have you. If you are on the feed already, and we got a great turnout already, please share your name and your location, and I will say them out loud to prove that I know how to read and that this is in fact live, which would be very cool. And I hope everyone is healthy and well out there in February already. It's hard to believe we're already in February of 2021. Let's get going with this show. As many of you know who followed the show, we cover what we describe as the future of work, life, and culture. And often what that means is we talk about things like customer experience, insight analytics, the application of automation and other modern digital transformation technologies. We also cover things like sustainability, impact sourcing, the ability to help enterprises to help in the environments that we operate and serve. One topic which underpins a lot of those things that I don't spend enough time talking about, so I'm excited to get started today, is about the vision behind the rationale into and in the wherewithal to invest in the future of work, life, and culture. And so with that lengthy lead in, I couldn't be more happy to welcome to the show Henry Alty to OneTAKE. Henry, thanks for joining the show.
No, thank you, Ian. And I'll try and live up to that star billing.
That's it. And if you don't, we'll just cut the feed early. It'll be really, you'll know if you don't live up. We'll just be like, and it'll be done.
He's gone. He's gone.
No. Okay. So Henry, I will resist giving too much of an intro of you, but I will start by saying you're an investment director of a company called Gresham Ventures.
Yeah.
You invest in innovation in this future of work, life, and culture. Share a little bit more about your background and what led you to the role you serve in today.
Yeah, of course. I'll keep it short. So I've had two stages to what I do. So for the last 8 years, I've been working in investment in sort of early stage companies. So usually businesses that are kind of just post startup in that kind of scale up phase where they're really looking to scale and grow what they do. Mostly with a focus on a couple of focuses really, but sort of financial services, professional services, process automation and workflow. So as my wife tells me, all the really exciting stuff that you can chat about over dinner parties when you have dinner parties. And then prior to that, I spent 7 years in strategy consulting. So really focusing on telecoms and technology. So sort of 2006, the iPhone launched in 2007, helping some big UK media and technology companies work out what did the internet and what did mobile internet in particular kind of mean for them. So that sort of then led me in the direction of going beyond the strategy consulting side of it and looking at the investment side of it as well.
Outstanding. So we have several things in common. One of them I'll lay out as sort of a disclaimer and context for this discussion. I also had a background in strategy consulting and looking at those evolutions in industry, including something, I guess, it sounds seemingly simple at now of the internet and how you would apply the internet to things that you do. I mean, that was really one of the first versions of true digital transformation. Yeah. But the other way that we have something in common is, for many who may not know, is I co-founded a robotic process automation startup consultancy in 2014, late 2014, early 2015. And you, sir, were our investor in August of 2017. So we were that scale up. We were at the stage.
Exactly right. Exactly right.
And for sake of full disclosure, we raised about $4.5 million with you, and then spent a little over a year, together, side by side, attached at the hip, trying to figure out how do we apply and deploy those resources strategically and effectively. And we together got to see several different stages of evolution of this future of work, digital transformation market.
Yeah.
There's no question. Well, go ahead.
No, go on. I was going to say, what was an incredibly quick journey for us. Often we're invested for kind of 4 or 5 years, and that ended up being a kind of 15-month sort of flash to bang, all the way through. So an incredibly quick journey. It's worth saying.
It's not something you said. It wasn't anything. We got to get rid of these guys.
Yeah. What do we got to do to get rid of him?
Right. Exactly. Right? What will it take to get Henry out of my hair? It was not like that. But you've gone on record in the past as saying, so we, again, to sort of peg things in time sequence, it was August, so late-ish 2017. But you'd said you'd been looking at the space for about 2 years prior.
Yeah.
And so what I'm fascinated to know is sort of that catalyst point. What attuned you to the general market? And then for those 2 years, what were you looking at? What were the themes? What were the sort of what were the, I guess, filters? What's the lens that a sophisticated investor looks through at a market that was really nascent? And I mean, at least I'll speak for myself. It was early days, and we were still trying to figure out what it is that any of us wanted to or could be when we grew up.
Yeah, no, look, and I think it's really interesting because I think we first met one of your co-founders, Ian, David Poole, in sort of early 2016. So I think we had that first conversation then, and as you say, about a year later, we ended up making the investment. And I think what we're always trying to do when we sort of think about where we invest is look for what we kind of call 10-year truths here. So we're trying to look for things that actually are true, not just if you think about our kind of average investment cycle of 5 years. And then we're not just trying to kind of look over that period, but look for the period beyond that as well and go, okay, well, look, where is the world going? What's going to happen here? And how do we kind of work out those trends and then work out how we play in them? And I think, when even, as you say, it was all quite nascent, but even when we were getting involved in, started thinking about it in kind of 2016, 2017, you already had, Blue Prism was kind of IPOing around then. You could see that stock price kind of the line going up, right? And so we kind of saw this huge enthusiasm for the market, a massive opportunity to really kind of change and be part of that kind of first wave of sort of digital transformation and getting RPA into companies. And then I suppose we thought of, okay, well, where do we play and how do we get ourselves involved? And it was, those kind of core platforms, UiPath was already on that journey, Blue Prism was already on that journey, right? They were already, relatively speaking, big companies for us. And so I think we looked at it and we thought, well, you're going to need kind of mini systems integrators to make that market work. Blue Prism and UiPath aren't going to want to sit there and deploy all this. And so we started looking at that kind of consultancy space. And that's when we found you and found Symphony and a couple of other people as well. And then it was really all about, okay, are we right about where this market's going? And then can we frankly find the best business to invest in, which, we ended up kind of ticking both those boxes with meeting you and the rest of the Symphony team.
This entire discussion is going to be very self-serving for both of us.
Yeah, I haven't been paid to say that, by the way.
Right, exactly. Okay, so before we continue on with the self-congratulation, I do want to welcome. We have an outstanding turnout today, so thank you everybody who's tuned in and listening. Hello, Erlen. Hello, Sanjay, Shay, Katrina, AJ, Andy Alleman from Ohio. Hello, Andy. Adam Mascatia from London. Hello, Adam. Vince from sunny South Florida. That's usually sunny here. And it's very nice right now. It's too warm for this jumper I'm wearing. Okay, anglicized it. Mary, hello. Tom Woodford from Oxford. Matthew Sullivan from Boston, where this sweater would make more sense. And David Reichman from Salt Lake City. Thank you so much, everybody, for joining us on today's show. So Henry, at that stage when you're looking at sort of players that could be relevant in an early stage space where you had a software company that had gone public at the time, and you were looking for sort of the ecosystem. Besides dashingly handsome founders, what were the other criteria you were looking for?
Beyond that, yeah. Good prompt. Beyond that, look, I think we're always, if you kind of go, okay, what really matters here? I think the three kind of big bits in our mind you've got to get right are the market, the team, and then the kind of the economics of this thing. Does it all stack up? And you can kind of, if you don't have one of those, then you probably don't have an investable proposition, right? If you don't have a team that has a real reason to excel here, that sort of says to you probably aren't backing the right people. If you don't have a market where they can be successful, which is ideally growing, ideally lots of demand, then again you're just going to run into a bit of a wall that you're going to find it really challenging to grow. And then finally, that kind of economics bit of, look, you can have a great team, you can have a great market, but if you can't find a way to kind of create value and recognize that value on your P&L and in your cash flow, then you're not going to build a sustainable business. You're kind of just, it's a bit of a greater fool theory if you're hoping someone comes along and goes, well, I really want that thing that kind of doesn't quite really work, but I just want to own it. So you've got to get all of those three things aligned. And and actually in some ways the team bit's probably the hardest bit to kind of get sorted, and the bit where you're making most of a kind of judgment call. Economics you can work out, market you can go and have all the conversations you want. Actually, that kind of, do I have a bunch of people here who can really perform and really deliver something in this market? That's the bit where we probably spend most of our time kind of trying to get a handle on things, because actually ultimately that's what a lot of what drives success or failure.
Sure. Well, that's great. It's a triptych. It's three things. I can wrap my head around that. So let's talk about, I guess I want to elevate for a moment and talk about the sort of the backdrop and the context. So the general market, as you described, what would you call it? What is this market that you were looking at?
Yeah, so I think funnily enough, actually, we kind of started looking at RPA as a quite a specific kind of sub-market, and we had a really specific thesis on RPA and what we were looking for and where we thought we could play. And then I guess we kind of, that was probably the start of 2016, and then we kind of stood back and actually thought there's a broader future of work kind of thesis here that we can hang things around. And RPA is one, process automation is one part of that. RPA is kind of one sub part of that. But actually, there's kind of a bigger prize to chase here, and that's a lot of what we've done since. If we kind of think about some of the areas we've kind of looked at and some of the companies we've invested in, since sort of we invested in Symphony back in 2017, have kind of hung around that idea that actually, okay, I guess fundamentally, look, the stuff that you can automate, you are going to automate, and that's where RPA comes in, and that's where intelligent automation comes in, and we've made some further investments in that space, and then actually beyond that, okay, what's the stuff that's really uniquely human, and how do you kind of enable that? And a lot of the kind of communications, collaboration software areas we've invested in have kind of hung off that kind of same broad thesis, but going, okay, well, if you automate the stuff that's doable, then you need to make sure that stuff that humans are good at doing, you can expedite and you can do really successfully. And actually, I'm sure we'll come on and talk a bit about COVID and COVID impacts, but that, I think that's all the more true now than it was. But you could see those trends, you could see the direction of travel for probably 2-3 years before now of where things were likely to travel, right? Where things were likely to go.
Right. No, perfect. So before we get to COVID, I'm stolen my punchline. How did you know we were getting there? When did that ever come up in a discussion?
What conversations involved that in the last 9 months or so, right?
Right. So you've got, so 2015, 16 timeframe, you're looking into this space. You're looking for an opportunity predicated on some early indicators that some digital transformation players were going to happen and help companies transform. Then we're together. So violins playing, happiness. But we're together sort of 2016, 17, 18, 19 timeframe. Is the lens different? It sounds like it is. You've broadened it, so it's not just RPA. You're looking at intelligent automation. I love the concept of it's not a pivot, it's a complement. It was sort of the mirror image, or the negative, if you will, of if robots are going to be a thing, then that means humans are very much going to be a thing. And how do we turn our attention to that opportunity set in this sort of grander equation? Now let's get to the COVID years. So early 2020. Some dynamics change. How has that changed your investment lens and philosophy, if at all?
Yeah, it's been really, it's obviously been super challenging, for almost everyone, right, and a whole bunch of businesses as well. And I think there are some areas, some sectors, that some of the team I sit in had been here historically focusing on. We'd looked at travel, as an example, right? So obviously there are some of the sectors where you just go, it's just a bit too hard to know what's going to happen here. Not there aren't great travel businesses to be built in the future, but making those calls right now feels quite brave and quite difficult. So we're definitely doing less of some of those areas. But I think actually, in a lot of, specifically the kind of areas that you and I are kind of talking about here in terms of automation, collaboration, the future of work, I think it's probably a bit of a truism, right? But everything's kind of been dragged forward by, 2 years in, 3 years, 5 years in the course of 12 to 18 months. And, we're sitting here, we're doing this remotely. I struggle to think how many Zoom calls I've done with this background now, but, it's over 1,000, right? So I think in a way, that's just pulled everything forward. It has accelerated everything. And if you think about the kind of areas that we were looking at, which is that kind of process automation, intelligent automation, workflow management, all of that stuff is so much more important now than it had ever been.
Yes.
Because you can't have a system, you can't have a process that involves handing bits of paper around an office or sending an Excel around,
Yep.
because those things that are too manual just fall apart when you can't have everyone sitting in the same space. So I think we've kind of just doubled down on those areas that we were looking at already, if I'm honest, and just
Sure.
really trying to kind of push forward and sort of accelerate some of what we were already doing.
Right. Now, and for those listening, if you've got questions, put them in the comment field. We'll read them out. If they're good ones, we will celebrate you. If they aren't, we will. No, just kidding. Please share your questions. So you said in the beginning, Henry, that the investment philosophy was effectively looking forward a period of time. You said 10 years. Right, because you aren't just looking at the sort of the holding period that you were interested in a specific investment, but the travel trajectory over the course of maybe two of those tranches of time.
Yeah.
Then you just said, okay, in the last sort of few months, we have traveled quite a few years as a result of this acceleration concept. And everyone's talking about acceleration, industry independent, whether it's in healthcare and telemedicine and telehealth, or it's a work at home discussion or digitizing anything. Stuff's going faster than we thought it otherwise might. Does that change your 10 years to be more like 6? Or is your 10-year horizon now 3 different tranches of activity just because stuff's happening more quickly?
Everything's kind of so. Yeah, it's a really great question, actually. And how much confidence can you have in that kind of 10-year sort of view, I guess, actually, kind of, okay, well, if everything's changed in 18 months, 12 months, can you really look forward 10 years? And I think, look, I don't think we pretend there's a crystal ball there that we kind of sitting on and we go, yeah, look, in 10 years, it's probably still going to look like this. I think it's more volatile. Everything's more volatile. Everything's harder to predict. But I think those kind of broad outlines of what things look like, you can kind of still have a bit of a view on, and you can still you're still trying to look that bit further forward, right? I guess, and just kind of trying to go, okay, you may be able to see 2 years, I think X is going to happen, but is that a sustained trend, or is that a bit, I guess, give you an example. We've been quite skeptical historically on the kind of delivery box. So in the UK, we've got things like HelloFresh and Gusto and all those kind of boxes through the post, like food boxes through the post to cook your own meals. And that's had a massive pop in COVID times, right? All of a sudden everyone's at home all the time, everyone's cooking all the time. And I think we sit there and go, okay, that's fantastic, but actually, let's try and think a little bit beyond the current world. Let's try and kind of project ourselves forward a little bit further and go, is that a sustainable trend over the next kind of 5, 6, 7 years? Is that something people are going to be doing loads more of in 7 years' time, or actually, is there a bit of a flash in the pan and everyone's doing it now, but actually, as soon as you can get it back out to a restaurant, are people going to do that again? Are they going to be desperate to leave their homes and eat some food that someone else has cooked? So it's just trying to kind of put that little bit of perspective on it that goes, can we just think a bit further forward? Can we just try and have a little bit of a view and a perspective on what's happening?
Right. I think it's interesting just because if you've ever read any book about how to create good habits, they always talk about the number of times you need to do anything to embed it in you, whether it's who knows what, whether it's like getting on a treadmill or brushing your teeth or something random. That sounds like I have dental hygiene problems. But anyway.
While on the treadmill, presumably, right? You're super efficient. Yeah.
It's very dangerous. This more, I hurt myself more often. But we've embedded those habits now for months. As far as if you need a thing if you need the basic toiletries, you have them wrapped in an absurdly large box and shipped to your front door rather than going to the store. And is that a habit that's now permanently embedded in how consumers do things? And does that color investments and business models going forward? Or like you said, I mean, it's absurd how excited I am about going to like a Target to go wandering the aisles and shopping. That's the most exciting part of my week, sadly. But it's
beyond this conversation, presumably.
Yes, because of course. But it's just because humans do desire some form of interaction. We're social animals. That's how we evolved and survived. So what does that mean to real estate? What does that mean to travel? What does that mean to even project management applications? I mean, you mentioned that we've digitized so much, but there'll be a pendulum swing back to something more normal that I imagine colors some of your investment thesis.
Yeah, and I think there's something really we did so really early on in my career we didn't actually do a project. We did a proposal for Ofcom, who are the kind of media regulator in the UK, and we were trying to kind of look at future demand for spectrum. So really big kind of future looking question of okay,
Right.
4G, 5G, right? What are people going to want? What are they going to need to do with it? Trying to kind of work out some of those things. And the way that we kind of tried to assemble that pitch was going, what are the kind of fundamental human drivers of some of this stuff, right? So you look at kind of Victorian scrapbooking, and you look at Pinterest, and you go, well, it's okay, different technology, very different way of expressing things, but fun. It's the same drive, right? You want to kind of express yourself. You want to put something in a something you can display and talk to people about. And scrapbook's one way of doing that, and and Pinterest is but it's the same thing. And so I think actually that kind of trying to go, okay, technology over here changes everything about how you can do stuff, but the things you want to do actually kind of, they just change at a much slower pace, and there are some fundamental drivers that don't really change there. I think that's quite a kind of nice way of trying to kind of balance out, okay, well, what should we be thinking about? Are we trying to revolutionize people's behavior, or are we just giving them a better way of expressing a desire they always had there?
Changing people's behavior is so easy. It seems like we should do that. Good choice. No, I mean, you're absolutely right. I mean, so much of what RPA, let's go back to that for a moment, was effectively just emulating a more traditional way of doing things with a digital format. We kept reminding ourselves we should challenge the underlying process we were taking a look at, so that we didn't just pave a cow path and create a different version of the same. But things exist for a reason. They've been laid down over generations. And so how, as you say, technology can change, but humans and our application to solve problems is probably a little slower as far as the pace of change is concerned.
Yeah, and I think there's definitely a tension there, right? And I don't think you definitely don't want to sit there and just go, well, we're just going to make it easier to do the stuff that you've always wanted to do. And it's there is a kind of you are trying to kind of pull people forward a bit and go, well, look, actually, I don't know, you look at some of the intelligent automation investments we've made, or the kind of document automation, so Rainbow for intelligent automation, Claralist for document automation in the legal sector, right? There's that balance of kind of the stuff you can do better, but actually at the same time, you don't just want to. You do want to digitally transform your organization properly. You don't just want to kind of go, here's process X, let's just do that a bit more efficiently, and then look at it in that little silo over there. You kind of want to encourage people to kind of think slightly more broadly about, okay, how do we? And I guess this was kind of the thesis behind Symphony to some extent, right? You're going to need people who are going to be able to take companies down that path of how do we do this whole thing better?
Right. Yep. No, totally agree. So we're going to go to a question that a listener has sent in. This is also somewhat sort of self-congratulatory in some way, shape, or form. But Andy Alleman asks the question, and if we could put it up on the screen, what do you? Well, I'll start from the second part and then move to the first part, because the second part's the congratulations, which was great to see the Sykes building on full display during the Super Bowl. So. Yes, if anyone watched the Super Bowl, we just happened to have a building that's right on the skyline of Tampa, and they projected all sorts of cool images on it, which I described in LinkedIn as a marketing masterstroke, of which I had zero to do with any of it. But but it's all, I did it all.
I was worried there'd be a Super Bowl quiz at the start of this chat, Ian. So I'm very glad I've far managed to not expose my ignorance.
Question 1: what is the real football? Wrong. Not the one with the feet. The other one.
The one that makes much more sense.
All right. Thank you. We agree. Okay. So, but Andy's actual question is a great one. Is what do you see as the biggest potential blind spot within the context of RPA?
That's a really good question. I mean, I suppose my kind of instinctive response there is probably the focus on the tool, and not. It kind of comes back to that conversation we just had, right? The focus on the tool and not on the kind of not on the process. So you kind of go, and I think I guess this was it's kind of where we started from as well, right? We started looking at RPA in 2016, going, let's look at RPA and work out what we should do there. And actually, then we did have to broaden what we were doing, because you go, well, RPA is fantastic, but it's a tool in a toolbox. And it can do some great stuff, but actually there's some stuff, you need to layer things on top of that as well to make it more effective and more efficient. And it's the legs, right, to the kind of the brain and the interactions with humans that need to happen as well. So I don't know, my view is it's a tool, it's not an answer. And so you just need to work out where you want to deploy it and where it's useful, and it's not a silver bullet for every problem you have in an organization.
Wait, what? Oh no.
No, I hope I absolutely agree. hope I'm reading out the marketing literature right here, Ian.
Yeah,
Right?
exactly.
That's what you told me to say. So hopefully
That's
that's
that's right. That's not at all. No, I totally agree. Completely agree. And I think and your investment philosophy and some of the investments you made post Symphony Ventures express some of that as well. As you'd said, there's sort of a generic set of Legos that you can build whatever particular thing you wanted to build and solve, and that I see in my mind as RPA. And then you did focus on some more of the sort of vertical specific, problem specific solutions. So is that the direction of the sort of the near term pendulum swing? Are most of the opportunities investments that you are either considering or looking at, or that you see being started up, more focused on sort of discrete problem solving for a particular industry or particular horizontal?
Yeah, I think that is right. I mean, look, I wouldn't sit in here and say, look, RPA is solved. It's not a solved problem, right? There's nothing. There's no more innovation you can do. But I think you've got in the current players, you've got some really fantastic solutions which are super deployable. And then I think, yeah, for us, so the two directions we've kind of gone in, as you say, okay, so there's vertically specific. So look at Claralis, which is legal document automation and generation, right? Very focused on the legal sector, really kind of effective in delivering documents at speed and at pace, and then doing a workflow off the back of that. And that's that's a kind of fully built solution. That's something you can pick up and play. That's a managed service actually for legal firms. So that's one direction. And I think kind of Rainbow probably nicely expresses the other, which is that kind of horizontal. Okay, you've thought about RPA and you've got a solution that you can deploy and that works. How do you layer on an intelligent automation and something that is kind of, I guess in the case of Rainbow, is auditable on top of that to actually help with the decision making around that? And again, these things it's not either or in that situation, right? The answer is both and. You go, okay, look, we'll have Blue Prism, UiPath, whatever it might be, and then on top of that, we'll layer some intelligent automation. On top of that, ultimately we'll layer some super smart AI tools that allow us to kind of really triage out some of the stuff that is at the top end, the kind of human interaction, and then on top of that, you've got an orchestration layer to make sure you can interact with humans in the right way. So yeah, I think building that stack of kind of RPA plus AI, IA plus AI is kind of where we're half of what we're focused on, and then the other half is really that vertically focused.
Outstanding.
Space.
Okay, so an elephant in the room right now in the industry is around valuations. And I won't name any particular organizations, but their valuations seem to be rather rich, and in some cases, that's either predicated on value that exists today or value that's perceived to exist in the future. What's your general philosophy about valuations of the companies that you invest in, and where they're going?
Yeah, I mean, I think it's you look at the public markets, you can see that trend up in valuation, and the same thing happens on the private markets, right? We see exactly the same thing. I think as an investor, you try and remain the tension is you try and remain disciplined on valuations, because ultimately investing at the wrong valuation is the easiest way to ultimately not realize a return for your shareholders, which is what you're there to do. Equally, you want to be in really exciting businesses, high growth businesses. Those tend to be businesses where there's lots of interest. I think part of the answer, I think, for kind of the way that we look at the world is and I think actually again Symphony kind of fell into this category a bit. There's a bunch of businesses that, if you take the traditional VC business model, don't really work for VCs, right? There's 10 boxes you want to tick as a VC. Is it a recurring revenue business model? Can it kind of triple, double? Those they're kind of rules of thumb for the things you're looking for. And there's a bunch of really great businesses that sit just outside those rules. And so look, take Symphony, right? It was a people-based business. It needs to hire, you need to hire more people to grow and scale. That's not a traditional VC business, right? That wouldn't necessarily fit the 100% of the mold. And so I suppose one way to kind of go on that kind of valuation or kind of make sure you're investing at the right valuation is to look at those businesses that are kind of slightly out of favor but are still fundamentally fantastic businesses. And that's a lot of what we try and do, is work out, okay, well, where are those edges where people are just kind of shying away for one reason or another, but fundamentally you've got something that can double year on year, triple year on year. The underlying drivers are in the right place. I mean, otherwise, it's a bit like buying a house, I guess. Look, if you're looking at the house and there's an open day and there's 50 other people in that house, the person who wins is, they're going to end up having overpaid, right? If you can find the edge, then there's a much better chance of realizing a really good return and kind of at a more sensible valuation.
Yeah, that's good advice. I'll bring you along next time I buy a house.
Yeah.
One of the things from a personal standpoint, when I headed into being an entrepreneur with some friends of mine, and we trusted each other, and we thought we saw an opportunity, and we took a leap and took a risk. And we did it for those reasons. We did it because it was exciting. We did it because we thought that there was something here. One of the byproducts, and it wasn't at all something we thought of going in, but it's been really humbling as a result of the outcomes, our work together, and then ultimately an exit, was that a lot of people look to Symphony as a showcase, as an example of what they would aspire to achieve, as far as following a dream, having to put in blood, sweat, and tears, and deal with risk and uncertainty. But the outcome was positive, and I love that we serve as an inspiration to other entrepreneurs who may want to try it themselves. What sort of advice do you give to people who are excited about the opportunity, who want to take a chance and take the jump, but don't know where to start and what to do first?
Yeah, that's a really great and kind of really challenging question as well, I think. And look, I never forget that we sit in quite a privileged position in some ways as a kind of private equity venture capital investor, which is we see a lot of deal inflow and a lot of businesses, and we kind of sit there and you sort of pick and choose to some extent, right, on what you think is going to work, what you don't think is going to work. And I think each one of those businesses is, as you say, something that kind of people have kind of put kind of blood and toil and tears into sweat and tears into growing, and so we might sit there and go, look, this is not the right business for us, but fundamentally that doesn't mean it's not a great idea. That doesn't mean it's not it's not going to work. So I think doing the research and kind of doing the work up front on that kind of customer demand, and there's been a lot written about kind of the lean startup, and how that sort of way of thinking about, you may or may not agree with everything that's in that kind of lean startup methodology, but there's a way of thinking about what are customers looking for. Are you delivering something that fundamentally delivers real value? And I guess when we sit there and look at, okay, well, where did stuff not work out, or where do we choose not to invest in businesses? I think the biggest reason is usually the proposition is not clearly defined enough. You're not clear enough on what value it is you're bringing to your customers, and can you be really clear and really crisp and really concise in like 2 or 3 sentences on what it is you're there to do. Right. And actually lots of other stuff is sortable. So, do you need to be the greatest kind of salesperson in the world? Do you need to be the greatest marketer in the world? Do you need to be able to build a finance team or, operation team? All those sorts of things you can kind of go out and sort, and if you've got the right investors, they'll help you do that. That kind of clarity on what is it I'm here in the world to deliver. Right. That's the most important thing. So I think, if you put, your marginal hour of time, day of time, week of time into kind of that stage of it, and being really clear on that, it's really noticeable to us when people kind of know that and have a view on that.
That's spectacular. No, that's great advice. Just spend the time to hone that message and be crystal clear and concise about it. And as you said, you see that investment paying dividends as they can articulate what it is that their mission is. That's great.
Yeah, I think that's right. Yeah, and where things go. I was looking back at a very old investment that I'd made sort of several years ago, which hadn't worked out as well. And you kind of go, well, I was looking back at the papers I wrote, and they were just they said things like, I don't quite know whether this is going to be applicable, but it's a huge market, and that's the danger zone, right? That's the kind of we only need 1% of this market, and then we're going to be we'll be billionaires. And go, well, okay, but which 1%, right? Who are those 1% who are going to choose you over anyone else? Why do they do that?
That's right. I've seen a lot of folks criticize that sort of aspirational fraction statement of just all they need is okay. Okay, so we're running out of time. I do need this is somewhat selfish, and you can teach me what the heck is a SPAC, and why are they everywhere now?
It is extraordinary, isn't it? I mean, and I would say I'm fortunately, I'm a long way away from having to get involved in anything like that. But I was reading about one today, which is, I think, a return of is up $35 on the $10 in price on the rumor that it may merge with an EV company. And you kind of go, that's just extraordinary, right? That is a proper South Sea bubble style. Okay,
Yep.
suddenly your $10 in that company is worth $35 just on the rumor they might do something with an EV. And it's that kind of. I think there's a bit of that kind of frothy bubble nature of what's going on. You kind of see that coming through in, okay, look, I'll put my $10 in a share, and I'm kind of trusting someone else to go out there, acquire something, bring it to the public markets, and and those they will make that work somehow. And those private markets,
I think it's
amazing.
See
the value. It's just, I mean, I wouldn't pretend to try and explain why it's happening now, but I think there is a bit of that bubble going on.
Well, is it an end of road option for you? I mean, as far as investing in private entities, and if there's more than just sort of the froth to any sort of philosophy of what to do with teams and good propositions, are you going to find yourself working with SPACs in the future?
I mean, look, it's probably, the kind of companies we're investing in, it's probably, you're probably talking a decent period before. But I think what's unquestionably true, right, is it's one of those pendulum things to some extent. We were talking about earlier, isn't it? Like, there's been a massive swing back towards private markets, companies staying private for so much longer, and therefore, private equity, VC companies kind of holding that. And at some point, you've got to realize value, and IPOing some of those businesses is a really significant risk. SPACs are kind of de-risking. Feel like they're de-risking some of that. So it's to some extent, it's probably a logical response to that. And you are kind of putting your money behind. You're choosing an individual who's kind of leading that SPAC, who you're backing the judgment of to go out there and find something. So for us, it's probably a way down the road. But I can see how the pendulum swings back and towards the public markets a little bit, and that it's an expression of that.
Well, thank you for indulging it is fascinating to see them sort of a weird acronym that sounds funny that seems to have popped up absolutely everywhere. That and Reddit effectively making video game companies worth lots, and Bitcoin, which is on fire at the moment. So those are other interesting things.
You can definitely see the kind of the spikes of activity, I think, in terms of people going, okay, I've got to, where do I get a return on anything, right? Where do I get the zero yield? Things look expensive. Public markets are expensive. So why don't I just go to something that is really expensive, but at least feels like it's got momentum behind it? The kind of premium for growth here is super high.
Right.
I think you see that come through.
It's all fascinating. So thank you, Henry, so much for sharing your insight, the sort of the narrative arc and history of our industry, and what you think are the opportunities going forward. What's any last sort of guidance or wisdom for folks who are intrigued with what somebody whose job it is to study what's next? What do you think we should all keep an eye on, or go join a company doing, or start a SPAC and buy?
And buy,
Want to start a SPAC? Let's just start a SPAC. Screw the rest of the stuff. Let's just.
What should you put your $3 billion behind? Just a bit of pocket change to keep it.
You have that money too. That's great. Let's do it.
somewhere in my
exactly.
Look, I think it is kind of that continuation of the stuff that we're still really excited about. Is kind of the stuff we were talking about, maybe even when we met you, right? We've always been looking at healthcare. We think some of those, we've just invested in a healthcare workflow system called eConsult, which does digital triage. We think there's just so much to do in that space, and improving the efficiency of those systems. And then I think that kind of broader workflow automation space, and the kind of that kind of human machine interface as well, and making that work as efficiently and effectively as possible, passing things between machines and humans is another area we're really excited. Anywhere where you're kind of combining that kind of real insight about proper real insight about data, and then a kind of automated way of deploying that's the kind of burrows that we're looking into at the moment, in looking financial services, in legal and professional services, in healthcare. So I think we try and stay quite consistent over time in terms of the big pots we're looking at, and then just kind of switch around some of those areas we're digging into.
Perfect. Well, thank you. Thank you, Henry, so much. For those listening, if you want to follow Henry, I invite you to Henry Alty, who is at Gresham Ventures, investment director. We'll put links somewhere in the posts after the show. He's written some great blogs recently, both about the acceleration at the hands of COVID, and also some of the opportunities and the imperatives to help small and medium businesses as well. A great piece you should definitely check out. So with that, Henry, thanks again for joining. Thanks everyone. Such a great turnout today. Thank you, Andy, for your question and for the shout out to the building during the Super Bowl. And with that, hope everyone's safe, healthy, and well, and come at you again very soon.
Brilliant. Thank you very much.